What is going on, investors? Hopefully you guys are doing well out there. If you've owned FSLY stock, I don't know where you've been. We've been covering this stock since May of last year. We've done 3 consecutive videos where we told you don't buy the dip back in May. We told you somebody should be fired from FSLY stock on August 4th. And then on November 3rd, I explicitly told you don't buy this stock until you watch my video and watch how I think this stock is going to continue to go down. Now, look, that was a nice little pat on the back. This stock's down 71%, and it's down another, I'm seeing 24% in the after hours, down to about $21 per share after closing closer to $29 per share during the regular session. What is driving the stock lower is they reported their Q4 earnings and their guidance after the bell. Revenue came in at $97.72 million. When we come over here to the financials, I'll show that to you. We'll look at the numbers and we'll take a look at how these costs break out and see if this company is any closer to turning a profit or if they're still bleeding money. That was 18.2% year-over-year revenue growth on that top line, and that did beat expectations by about $5.2 million. Now, what I think is sending this stock lower is this guidance is pretty bad, honestly. Total revenue is expected to come between $400 million all the way up to $410. Expectations was much higher than that, all the way up to $419. That means consensus means there were some people actually a little higher than that, and this company is going to come in on the bottom range of that. That is absolutely going to tank your shares, considering also when you look at this stock chart, the momentum was just completely out of this name for a long period of time. And now, why have we been able to correctly predict the direction of this stock? Okay, it's not just more recently, like a lot of stocks, this stock has taken a dump. No, it's been steadily declining for over a year now. The stock has just continued to go down, and that is because the numbers it prints. That's why on this channel, we don't go necessarily for all the clicks and views. Trust me, I could have way more clicks, way more views, way more subscribers if I put up videos that are catered to that environment. I'm trying to make you the best investor, and one of the ways you do that is opening up these financials and making the decisions for yourself. Take a look at this. We had that 17 or 18% year-over-year growth rate on that revenue side, 82.6 up to 97.7. We take out our cost of revenue and we get down to a gross profit of $49 million. Last year, you were at basically $49 million from a rounded perspective, so we've barely moved our gross profits. So we saw our revenues increase by about $15 million, and unfortunately our gross profit barely moved. That shows you had margin contraction over at this company. You don't like to see that, especially in an inflationary environment. Now they have other operating expenses, and guess what? Those did hit inflation. These things are moving up rapidly. Take a look at our sales and marketing went from 34 million up to 42 million. So roughly an $8 million increase there, and your gross profit again barely moved. Also, your revenues didn't grow by really that much. So our total operating expenses essentially flat quarter over quarter. You went from 106 on a yearly basis last year to 106, almost identical number this quarter. And so you take this 49, you minus off 106, and yeah, you get a negative loss from operations at $56 million. Last year, you lost 57. The same thing holds true for the entire year. This company is losing in that $50 million range per quarter, as they lost $219 million for the full year. Again, this is on an operating basis. You come all the way down to net income, paints the identical story. This is not a stock that you want to invest in when we have mediocre growth rates, margins contracting, and costs not going down, but essentially staying flat. At least they didn't go up by a lot. That's probably the one positive thing that we can say here. Well, this company is not going to make money, and these stocks are going to get thrown out with the rest of the trash in the market at the current time. Now, in terms of their balance sheet, weird stuff kind of going on here. Marketable securities, they say they have about $520 million. That's more than what they had last year. I noticed that on this long-term debt portion, they have a new $933 million. I believe this is probably a convertible note, because what I noticed is when we come down to cash flows, we have this issuance of this convertible note. So we recognize $930 million in terms of the issuance of that. It looks like they turned around and bought some marketable securities for $928 million. But oddly, and it may be just how these notes convert, I don't know. This is not something something, typically I'm not looking at companies that are in this bad a financial condition. This isn't that bad, but this is pretty bad. But what I noticed was we issued the convertible note, we bought these marketable securities, but when you come out here to marketable securities, you only have 361. So could be just an accounting thing, could be that they don't convert, they have invested, all that types of stuff. So it could be in subsequent quarters we see that. It could be in this first quarter that maybe on the next balance sheet we see that, but we haven't recognized, we have it down here as a liability, but eventually you'd expect that money eventually to convert to something, whether it's equity or something. The company should recognize that value. From a cash flow perspective, paints an even worse story than on the yearly basis. You lost $222 million from a net income perspective. You had the generous stock-based compensation. This is why we always say somebody should be fired over at FSLY, because off of $220 million loss, you paid your executives over $140 million. And guess what? Last year, you paid them $64 million, and we thought that was egregious. And you come down here to net cash burned by the operating activities, it's basically doubled. It's up to $38 million. Last year, we were sitting just at 19. So everything, all things being considered, these financials are a complete disaster. This company is not very good from a balance sheet perspective. It's terrible from an income statement perspective. You've got marginal growth on that top side. You had marginal growth projected for the full year, and you have an unprofitable company, and that's likely not going to change anytime soon. Now, the good news is, if you haven't been in this stock, it's gone down quite a bit, and it's getting back down to an area where it actually IPO'd all the way down to about the $20 per share. We do have levels lower than this, basically at $10 or $11, and right now I would not expect anything less than a company that has simply not been able to perform. There are some areas of support down here, basically where the stock is at 20. I would expect the company, I would expect executives, quite frankly, if they believed in this company, I would expect investment banks that believe in this company to step up at these levels. But the way this stock is performing, it wouldn't surprise me if the declines just continue. You really need to wait for higher lows on this one and higher sets of highs. I wouldn't touch this stock, quite frankly, until you got back up above the $40 level. And that's simply just from a technical perspective. If for some reason the markets reverse, all of a sudden this could be kind of a momentum play, although you'd have about 200 other stocks that would be probably a better choice than this one. From a fundamental reason, I would not touch this stock. When you see these types of things, mediocre, like high teens growth, that's not that great, and then contracting margins year over year and losses that aren't getting any better, that is not a stock you want to touch. I don't care what valuation it is. This might be the last time we cover FSLY unless they turn things around very quickly. We've predicted this one correctly, and I personally wouldn't have it in your portfolio or even on a watch list at this point. That was FSLY. Hopefully you guys enjoyed that video. Good luck with your investments.